Howdy, Jacob here. Today we're looking at Lexinfintech Holdings, ticker symbol LX. So it's in the consumer finance industry. This is going to be a similar view to how, if everyone remembers my last video from way long ago, Finvolution. I say way long ago, probably like a month ago by now, but Finvolution was also a Chinese consumer finance industry company. 295 million market cap, $113 million enterprise value. So a lot of net cash on hand compared to debt. The initial view I'm seeing is extremely cheap. 1.5 price to earning, 0.2 price to book. I'm sure if we looked at it, it might also be a net. So 2.5 billion on current assets, total liabilities of 2 billion. That is leaves 500 million for the market cap, and we're seeing 295. So this would be considered a net company. Currently selling with a 12.8% dividend yield. That's crazy. Okay, so let's start looking at some numbers here. Again, if this is similar to Finvolution, then it might look like a screaming deal, but um, it might turn out that if you do further research, it might not be the case necessarily. So they do not have what their payout ratio is, but we can see that it's a 23 cent dividend, and a 5-year average on earnings per share is well over $1. So it seems like they can afford it. And that dollar is based on, let's say, 200 million net income. Their free cash flow is way more volatile, which is very strange. They have 400 million in cash and then negative 400 million, nothing. So that's a little odd. This is going to be a very wonky thing. So the company was founded in 2013, and fin technology has just not, like, consumer finance technology in China has just not been around for a very long time. So assumptions are going to be very difficult, as the whole industry hasn't even been around very long. But I took the P and price free cash flow from Finvolution. We After looking at their historical P and price free cash flow, we looked and said 3 was conservative. This is a similar company, so I'm just going to pull those figures. Um, and the dividend, it looks like they can afford that. The dividend alone is making it worth $1.60, and the company is $1.85. So I already know that it's going to look like a screaming deal here. I'm going to say 0% revenue growth, 15% return. Oh, because I didn't do 50% return. That makes more sense. All right. It's because the dividends were calculated at 0% return. It was looking like a screaming deal. But with 15% return margins, let's average this out. 14, 14. Maybe let's do 10, 15. Or let's do like 8 and 12, and then share change 0, even though they've bought back some recently. This is still saying that it is a buy right now. So we found another company that I'm going to have to do more research on. It's a Chinese-based company. I know a lot of people in the Americas and likely elsewhere would have trouble investing in this company. So if it hits your dictionary list, then just don't even look at it. But for those that view, companies as, or stocks as they are, ownership of company, even if they are advisory shares, then yeah, keep in tune, because I'll be coming out with a video doing further in-depth analysis on Lexinfintech Holdings. So thank you, and I hope you have a good rest of your day.